Good afternoon, everyone. It's my pleasure to welcome you to Tallink Investor Conference webinar about financial results and company's activities in the second quarter of 2019. Today we are hosted by the Chairman of the Management Board, Paavo Nõgene, Member of the Management Board, Harri Hanschmidt, and Financial Director, Veiko Haavapuu. Right after the presentation, we will open the floor for questions. If you would like to use the opportunity to ask questions, please use the question box on the right-hand side of your screen. Your questions will be answered after the presentation. Please, Paavo, the floor is yours.
Good afternoon, everybody. My name is Paavo Nõgene, and I'm happy to be here today taking part of our second webinar. I will give you a short overview current Tallink Group for those investors who are maybe not every day looking over our information, and then I will give floor to Financial Director who will give the overview about our second quarter. Tallink Group today operating in the Baltic Sea region. We have 14 vessels. We operating 7 ferry routes and 4 hotels. Revenue in 2018 was approximately 950 million euros and asset base around 1.6 billion euros. In second quarter, our average employees number was 7,360 employees. And during the summer period, it is a bit higher than year average, which is around 7,000. We served last year 9.8 million passengers, and we have now more than 2.5 million loyalty program members in our loyalty program Club One. Regarding the second quarter, we are very happy to announce that we made 3 months in a row our passenger record in the May, in the June, and also starting of third quarter in July. We had the highest number of passengers ever in May, June, and July in Tallink Group history. But Veiko Haavapuu will continue now. Harri Hanschmidt, will continue now with second quarter overview, and afterwards I'm very happy to answer also questions with my colleagues.
Thank you very much, Paavo. My name is Harri Hanschmidt. I'm a board member for Tallink Group, and I will give you a quick overview about the highlights and key facts of the 2019 second financial quarter. I'm happy to say that following the extensive upgrades of the vessels, we are well prepared for the high season, and we are already able to see this reflect in the second quarter results, and also the strong development of the July passenger numbers, which we saw a new record. We had an increase on all routes and carried a total of over 1.2 million passengers, which is 1.2% more than last year. Regarding the highlights of the second quarter, we also did a installment in the new vessel, new building. We paid a down payment of 12.4 million. Also, Piret Mürk-Dubois joined the Tallink Management Board. We had an annual general meeting where dividends and capital reduction was approved by the annual general meeting, and dividends were also paid out after. The capital reduction will be done in December, but the decision is done by the general meeting. Going to the events after the balance sheet, we also did a loan agreement for the new LNG powered fast ferry, and have this loan agreement signed. Also, I already mentioned the record number of passengers in July. Going to the next slide, we can see a rise in passenger numbers of 0.8%, and there was a slight drop in cargo of 1.5%. Also, we saw less passenger vehicles in the second quarter. We did see more passengers on almost all geographical segments, and Easter holiday this time was in the second quarter. Last year it was in the first quarter. This also has an effect. We also had one less hotel operating in Q2 in 2019. Revenue from shipping operations in the Baltic Sea rose by 0.5%. We enjoyed a lower fuel cost, and part of that was due to the fuel price fixing that we did with our main supplier. We had a record earnings before tax, and why we say earnings before tax is because we paid out a higher dividend and therefore had a higher dividend tax rate, and this decreased the net profit slightly. On page 6, or the next slide, we can see our quarterly seasonality breakdown, and you can see there are no big changes here. After the low season, we have entered into a very stable second quarter with 2.7 million passengers, 100,000 cargo units, and a revenue of 256 million euros. But we saw a strong EBITDA level. We have an IFRS effect here, but if we take the like for like, we also saw 6.8% raise in EBITDA, and this is a very good result for us. On page 7, we can also see the seasonality on the net profit level, and this year, the first quarter, we did many renovations on the vessels, and this affected the results negatively. So now we are very well prepared for the summer high season, and we already see that this is paid off. On page 8, we talk a little bit about distribution to shareholders. We paid out 0.05 euro per share, and that was already paid out in 3rd of July 2019. On the graph on the right, you can see we will also do the capital reduction. So this year we will pay out 12 euro cents to the shareholders, and from 2013 to 2019, we have paid out almost €250 million to the shareholders. On page 9, we see a little bit information about the new vessel that we are building, and that will be in operation between Tallinn and Helsinki from 2022. The vessel will cost 247 million euros. 30% is paid during construction, 70% at the delivery. And we are very excited. Currently, we have a campaign where everyone can propose a name for the vessel. So everyone should visit www.tallink.com competition and give their best shot at naming the vessel, and use the possibility to go into history by naming the new vessel. From here, I will give word to Veiko Havapuu, our Financial Director.
Hello, my name is Veiko Havapuu. I'm the Financial Director of AS Tallink Group, and I will continue with the overview of the financials and the new LNG-powered fast ferry financing arrangements. The first prepayment for the new LNG-powered fast ferry was made in April, an amount of 12.4 million euros. The next installments will be paid in the second half next 5% in the second half of 2019. Next 10% installments will be paid respectively first half of 2020 and second half of 2020. In Q2, the prepayment 12.4 million euros for the new LNG powered fast ferry was majority of the capex made in the Q2. Yes, the loan agreement for the new ferry was signed in July 2019. The OSCD term export credit loan in amount of 198 million euros was arranged by German KfW IPEX Bank, and the Finnish export credit agency Finvera guarantees 90% of the loan. The loan's maturity is 12 years from the drawdown, and the drawdown presumably will happen in early 2022 when the ship will be delivered. On the next slide, slide 10, I will give you an overview of the development of the group's operating segments. The total revenue increased slightly by 0.7 million euros. And the developments on the operational segments are as follows. The restaurant and shop sales and also ticket sales enjoyed very nice growth during the Q2. That was supported also a slightly higher passenger number. So we had 20.5 thousand more passengers compared to last year, Q2. And also the higher ticket per pax and onboard per pax. Having said that, the development on the Estonia-Finland route due to the high competition, the Estonia-Finland route revenue and also onboard sales per pax slightly declined compared to Q2 last year. Cargo transportation, so the cargo units were down by 1.5% compared to Q2 last year, so therefore also slight decline in the cargo revenues. Accommodation sales slightly down from last year as well, and here is the main impact from the absence of one hotel. So we discontinued operations of the Pirita Spa Hotel at the end of the last financial year. Income from charters on the same level, one contract there, and other sales coming from various items, it's down from last year as well. Slide 11, here you see the development by geographical segments. The largest revenue, 95 million euros, was earned in Q2 from Estonia-Finland geographical segment. As mentioned earlier, despite the higher passenger number, the tight competition resulted in lower per passenger revenue, and therefore there is a slight decline in the revenue. Estonia-Sweden, slightly down from last year, but doing quite well still. The negative effect on the Estonia-Sweden segment is actually coming mostly from the downturn of the cargo volumes and revenue on these specific routes. Latvia-Sweden, very good developments. So passenger spend on board and both cargo units have been nicely up from last year, and the revenue improved by 1.8 million euros in Q2. Finland, Sweden, nice numbers here as well. So we have 1.5% more passengers, and also cargo units were slightly up. So all in all, 1 million improvement in revenue compared to Q2 last year. Other segment, so that's all other segments combined except the passenger operations, passenger ferry operations operations. So the charter is on the same level, hotels down, referring again to the absence of one hotel, and onshore revenue slightly down from last year as well. Going to slide 12. Here you see the consolidated income statement. So the sales slightly up from last year. Cost of sales 3 million savings compared to Q2 last year. And here, of course, we have positive effect from the lower fuel bill, and also we have a little bit improved the onboard margin, so therefore less cost of goods sold. On EBITDA, the 51 million euros EBITDA, this is including the effect from IFRS. So the adjusted comparable EBITDA is 47 million euros and up from last year 3 million euros. The adjusted EBITDA margin is 18.1%, and that's very nicely up from last year as well. So net profit is 15 million euros on the same level as last year for Q2. But here we have to note again that we have 4.3 million higher tax bill for the dividend tax this year, as the distributions to shareholders were higher this year. On slide 13, consolidated cash flow statement. So a nice improvement in the operating cash flow, 4 million up from last Q2. The capital expenditures, 18 million euros. Majority of this is 12.4 million euros of the prepayment for the new ship. So rest 5.6 million euros for regular maintenance type of capex. Also worth noting here that the interest and other financial cost is 0.5 million lower payments as we enjoy lower interest environment here. So change in cash all in all quite comparable to the Q2 last year. On slide 14, here is the overview of the balance sheet. On the end of Q2 numbers, we have effect also from the IFRS 16 implementation. So the total assets in a range of 1.6 billion euros. The non-current assets up from end of last year. But here we have to note that the IFRS adjustment related assets amount at the end of Q2 in fixed assets 102 million euros. And also in liabilities, on interest-bearing liabilities at the end of Q2, there are IFRS 16 related assets in amount of 107 million euros. The shareholder equity stood at 810 million euros. Net debt to EBITDA was 3.6 times, very safe and nice number here. Net debt amounted to 537 euros, 37 million euros, and that's again has 107 million euros impact from the IFRS adjustment related assets here. The equity asset ratio stood at 50%, very solid number for the company, and book value per share was 1.21 euros. On slide 15, just for your information purposes, we continuously highlight the IFRS 16 leases effect. So for your comparability purposes, and on the second quarter financials, the effect to EBITDA compared to last period was 4.3 million euros. So addition to depreciation was 3.7, and addition to interest cost was 0.6 million euros from the implementation of the IFRS 16. And of course, no effect on the net result. Hereby, we finish our presentation and we open the questions and answers section.
Thank you, Veiko. Now we will proceed with the questions in the order they were received. I would like to remind you that you can send in questions using the question box on the right-hand side of your screen. You will be now given a couple of minutes to submit in the questions.
So, we have some questions. The first question is, can you break down the profitability improvement? Was it mainly driven by improved fuel cost? We can say it is a combination of several items. The revenue increased for shipping operations. Fuel cost played also a significant role as well, but also a strong control of the costs. Second question was regarding Estonia-Finland route. Is the revenue slide only because of lower ticket sales, or is there something else? The lower ticket sale is one component, but also we saw in the first half of year the lower onboard sales as well in the second quarter. Third question also about the Estonia-Finland route. Do you see this route's profitability or volumes have more of an impact from the alcohol tax reduction that Estonia did? Maybe we can refer to our already released July statistics. We see higher volumes as we have a fixed cost component. High fixed cost component, increased volumes usually translates to profitability as well. Fourth question, given that market price of relevant fuels was comparable to Q2 2018, could you please quantify or give some color on how much was the positive effect from hedges, how much was the positive effect from lower consumption? Answer will be that it is a mix of both, with price fixing playing the important role. We do not have a specific commodity hedge. We use fuel price fixing with our main supplier, as also mentioned before, but also the investments to the fleet giving also positive impact. And yes, we can see positive effect also from lower consumption per nautical mile. Fifth question, and perhaps give some thoughts of hedging level for forecast 2020. We don't have the hedging policy, but we're constantly analyzing at the market situation. Next question was about ticket pricing. Ticket revenue is up 3% despite tight competition. Do you expect to be able to keep up ticket revenue growth in second part of the year? We do our best. We don't know what the market situation will be in our low season, but we are in the good shape to keep our market leader position and to earn more than our good competitors does. So we continue our work to fulfill our investors' expectations. Second question, why was cargo volumes down by more than 10% on the Estonia-Sweden route in quarter 2? There are a big imbalance between import-export on the markets, and also Swedish krona currency rate have here quite significant role, as the business is done mostly in euros and the currency rate is not very good for export from Estonia, so it has impact to this route specifically. Next question, with regards to the lowered alcohol taxation in Estonia, do you expect it to boost your sales in second part of year? Do you expect it to positively affect your profits? We have seen from 1st of July some increase in onboard sales in our markets. We don't know, and it's too early to say will it continue and in which level, but of course the lowered alcohol taxation in Estonia have a positive impact to our onboard sales, and we will see in the Q3 and Q4 where it will end up. And we are thankful for the government about this movement that the alcohol duty excise is lowered now, and it of course will give us a good competitive advantage. Example from Finland market. Next question, fuel cost for 2019. Can you quantify the fuel cost saving you expect thanks to hedging and improved fuel efficiency? As I already answered, we are not going to give out estimations, and as the market situation is very volatile and we fixed only part of our needed fuel, we don't know exactly where the fuel price will end up in the second half of the year, so the estimations are not very good to give out in such situation. Next question, what impact do you expect from lower alcohol excise duties in Estonia is already answered. We hope it will be positive in second half of year. Could you comment on the tax outlook for remainder of 2019? I can just say that under the law in Estonia, the government is not allowed to increase the taxes without 6 month notification before, so we don't see any tax increases in 2019 due to that, and we haven't heard any next plans to lower some taxes in Estonia during the 2019. And next question, according to Moody David report, as reported by some media outlets, Tallink is interested in liquor business at Singapore Changi Airport. Could you please give a comment on this? As we have said many times before, Tallink is not ready. Tallink trying to find the new ways how to develop the company in our core business and also onshore. And of course, attending some tenders in the international airports and some other places is one way how to develop the company. But as the competition in this market is very strong, we can't give any comments, and we will comment these kind of things after we have signed some agreements, and we will make also the stock exchange release about that for sure. So, and here I will give floor to Harri Hanschmidt to continue.
Okay, thank you, Paavo. So we will now answer questions that are right now coming in. Those questions that Paavo answered were already present and we were able to prepare, so maybe colleagues also want to pitch in. How do you expect second half profitability to develop? Q1 was weaker than last year and Q2 was much better. How much of the improvement in Q2 was due to one-off effects like Easter or fuel cost? Well, as we already said, we made this year quite big preparations in renewing the fleet, and we already said in Q1 that we will be prepared better than ever for the second half of the year. So obviously we do. Oh, sorry. So obviously we will do the best we can, and then we do hope for much better quarters to come. Easter always is a tricky effect to quantify, but as we said, this is already was in Q2. So there was definitely a positive one-off effect from Easter. So next question, what to attribute strong June fax volume on Estonia, Finland? Well, this year we saw a little bit change in passenger behavior. passengers booked the tickets on very last minute, and we do think that has much to do with weather and obviously many nice options to travel, and we are very glad that the passengers choose us even when they did it on the last minute, but we did see some nice numbers between Tallinn and Helsinki. Please comment the factors which influenced EBITDA growth. Well, obviously, fuel price here played a role, and as well cost control. Do you see increased onboard spending since July 1 when alcohol taxes were reduced? Can you describe it in numbers? Well, we cannot describe it in numbers, but yes, we have seen increased activity on board, and then we have also said that we think this tax movement is a very good thing for our economy and also for our company. Could you please repeat how will the prepayment for the new ship split between 2019 and 2021? I will give this question to Financial Director Veiko Haavapuu.
Okay, I will repeat the split of the prepayments until the delivery of the vessel. So the first 5% installment, 12.4 million euros, was paid in April this year in Q2. The next payment will be in the second half, in the same amount, second half of 2019. The next 10% or 24.7 million down payments will be made on first half of next year and also in second half of next year. So that will be all in all 30% of the total purchase price of the new vessel. And these prepayment dates, the last 10 plus 10% are related to specific milestones in a construction, steel cutting and keel laying.
Okay, thank you, Veiko. So we have the next question. How did you manage to reduce the onboard staff by 2.6% in Q2? In summer months, we use additional staff for the ships for servicing as the passenger numbers are higher, and it's our everyday job to do this as effectively as possible. Yeah. To what do you attribute stellar performance of Latvia-Sweden route, both in terms of packs and cargo? Do low alcohol excise taxes in Latvia contribute to packs demand? Well, Latvia is still a developing route for us, and we do hope that this route will be even much bigger. We have done investments on this route, and I think it's only the start. There is no big single reason. So the next question. Recently, global oil prices have dropped significantly. Do you still benefit from hedging in the second half year? Again, we do not do hedging, but we have the fuel price fixed, and this fixes until the end of the year. So we continue to see this effect, but also benefit from the lower fuel prices at the same time. What is the company's target leverage? Do you expect more capital reduction in the future year as the company continues to generate significant cash flow? We are keeping a healthy balance, and then that's one of our strategic points to keep optimal balance of debt and capital to be able to pay sustainable dividend. And this year also we did a capital reduction to achieve optimal capital structure. And Paavo wants to add here, so I will give a word to him.
No, I will take the next question, which was that saw in the newspaper that Tallink's employee was visiting Liepaja in Latvia for possible destination. How possible could be such opening to also look on other possible cities? Which ones? Actually, I don't know which Tallink employee from 7,300 visited Liepaja. And as I mentioned also before, that we trying to find different ways how to develop the company onshore and also in our core business. But right now we don't have any plans with Liepaja.
Then there is a question, what is the estimated tax effect of the capital reduction? So there is no effect on taxes as according to the valid legislation, if the paid in capital is reduced, then there is no tax effect on this. So the tax will be only on distributed dividends, or if at some point the capital is reduced, which is not paid in cash, or, for example, raised some fund emissions or something like this. So there is no tax effect. So next question, have you seen any concessions to stevedoring fees extended by Tallink port? Is there any discussion for such reduction? Well, we are in close cooperation and contact with all the port authorities. And of course, we have continuously different topics on our agendas, but probably this is not the place to comment specifically this topic. Do we have
thank you.
any more questions?
It seems that all the questions have been answered, and if you don't have any more questions, then I would like to thank Paavo, Harri, and Veiko for the presentation and answers. And that I would like to remind you that all the listeners that summary of the webinar, together with the presentation and link to the recording, will be made available in today's investor event announcement from Tallink. You can also listen to today's recording directly from the Nasdaq Baltic YouTube channel on webinar playlist. Again, thank you Paavo, Harri, and Veiko for your time, and thank you participants for joining and for the interesting questions asked today. We hope to meet you next time.